Welcome to Tuesday's Market SITREP here at Top Gun Options. Matthew Buckley, call sign Wiz, the Chief Investment Strategist here at TGO and Wealth Creation Investing. And we've kicked off earnings season unofficially, but kind of officially, with Alcoa reporting after the hours yesterday, and they beat. They beat by a penny, 7 cents instead of 6 cents. Well, let's take a look at the Wall Street game that we all know that Wall Street plays. Folks, a year ago they were calling for 70 cents EPS, earnings per share, and they slowly realized that they couldn't hit the ball over that net and walked in those expectations all the way down to 6 cents. So they come out and, of course, you know, the idiots on Comedy Central call it a beat. It's not a beat, folks. I mean, look at this. There's the consensus estimate for Alcoa earnings. Can't hit the ball over the net, lower the net. And, of course, the earnings don't take into account a $244 million restructuring charge, which renders that earnings, quote, beat pretty much laughable. So here we go, folks. We're kicking off earnings season, and we're already into the typical Wall Street sandbagging game. Everybody knows that Apple does it, but everybody should know that the markets do it. We covered this in yesterday's Monday Market Outlook over at Wealth Creation Investing, but this is the highest level of negative earnings guidance, pre-earnings guidance, since Q1 of 2001. So stand by for an incredibly volatile earnings season. Yeah, we have stuff going on in Egypt and, you know, world events, and China's not doing so well. Japan might be doing well. A lot of and the Eurozone's obviously imploding. IMF is cutting world growth forecast. Quack, quack, quack. But let's start caring really what's going on. The closest alligator to our boat is earnings. And we've ever since the Fed chief came out and said, hey, last call, and his lieutenants came out and said, just kidding, no last call, at least for a long time, the markets continued to melt higher. Well, these rallies, these triple-digit rallies, you know, 4 days in a row of the market going up, starting to feel a little long in the tooth, folks. I'm telling you this right now, that with earnings potentially coming in weaker than expected, we're in for a very volatile summer ahead. And I just completed our primary live trade brief that we do every Tuesday morning at 0900, and we put on a bullish double vertical on the VIX on volatility out to August VIX expiration, which is August 21st on the VIX, because between now and when August VIX expiration, in my opinion, there's going to be a freak out in the market. As you can see, let's take a look at a chart of the VIX for the past 6 months. Every month, as you can see, there's been a freak out. February, March, a couple freakouts in April, big freak out in May, big freak out in June. And here we go. Every time volatility gets back or pulls back, it tends to pop. We are in a very volatile environment where any little freak out in the market can send the VIX scrambling higher, or, as we've seen today with these rallies, send the VIX tumbling. So it's a pretty solid trade, in my opinion, to go counter to the VIX. As the VIX implodes, I tend to get bullish on volatility. As the VIX explodes, I put on a bearish double vertical right around here on the VIX that just cleaned up recently. So volatility doesn't stay elevated forever. It tends to revert to its mean, or what I tend to call its resting heart rate, and we're getting back down to that what we've seen the resting heart rate over the past 6 months, around this 13, 14 level. So in my opinion, time to get bullish on volatility, because I don't think these rallies go on forever throughout the summer as the market starts to wake up that earnings just aren't that good. And, you know, maybe Bernanke's wrong when he says the data support that, you know, this economy is recovering. We covered this yesterday, so I'm not going to beat a dead horse, but the jobs report just wasn't that good, folks, when you look at it. Now, if you listen to the spin out of the White House, it was a great jobs report. If you actually take the time to care and look at the numbers, we are putting more people into part-time jobs than full-time jobs, with, for one word that I covered yesterday, Obamacare. Companies are getting rid of full-time employees, forcing them into part-time positions, because they don't want to pay for their health insurance. So the Obama's master plan of putting people, creating a whole class of people dependent on the government is working perfectly. And the fact that we're quibbling over 56,000 jobs here or there, it's incredible. I mean, we're talking about jobs numbers that, you know, could essentially fill the amount of people can fill Soldier Field. We're talking about America here. And we're talking about 56,000 jobs here or 162,000 jobs there. Really? I mean, you know, that's the population of a borough in New York, and we're supposed to think that this economy is recovering and doing great. Just not a lot of great stuff going on in the markets. But like I said, we're hedged here at Top Gun Options for all of those market conditions. Obviously, seeing a very good day in the primary live trade brief model portfolio, up $3,000. Seeing you know, strong gains in the XHB and the housing, and also our Brazilian long-term Brazilian strategic mindset because of the World Cup, the Olympics, and a papal visit. So a lot of good stuff. Our Japan long-term trades being bullish on the Nikkei. A lot of good stuff going on in the primary live trade brief model portfolio. So happy with what's going on, but also has some bearish positions as well to be hedged, and still trying to get filled on this VIX bullish double vertical on volatility. Okay, got to run, guys. I'll be back tomorrow with Wednesday's market sit rep here at Top Gun Options. Happy hunting. Make sure you hedge, and I'll talk to you guys tomorrow.